Welcome to the world of corporate governance. As an aspiring independent director, you're not just a board member. You're a guardian of shareholder interests and the company's conscience. Your mission: ensure fairness, transparency, and accountability, not just profit. In today's world, a single governance lapse can destroy decades of reputation and trust. Investors demand integrity, and you are their eyes and ears in the boardroom. Challenge management, ask tough questions, and protect minority shareholders. Your independence is your greatest asset for balanced decision-making. This guide is your roadmap through the Companies Act, CBI regulations, and other key laws. Understanding these rules is non-negotiable. They define your powers, duties, and liabilities. We'll also touch on IBC and FEMA, which shape how companies operate. The stakes are high, but with knowledge and ethics, you can make a real difference. Help build companies that are successful, sustainable, and respected. We'll simplify the law, offer practical examples, and give you insights beyond the textbook. Let's begin your journey to becoming a true guardian of corporate India. Corporate governance in India stands on a strong legal foundation. The Companies Act 2013 is your primary guide, especially Chapter 11 and Section 149, which mandate independent directors and set your code of conduct. Schedule 4 is your rulebook for professional conduct and duties. Know it well. For listed companies, SEBI's LODR regulations demand even stricter governance and timely disclosures. LODR defines board committee structures and mandates prompt reporting of material events. Non-compliance can mean heavy penalties and reputational damage. The Insolvency and Bankruptcy Code, IBC, reshapes your role if a company faces financial distress. Board powers are suspended, and your past conduct is scrutinized. FEMA governs all cross-border transactions as a director. You must ensure strict compliance to avoid severe penalties. These laws, Companies Act, SEBI LODR, IBC, and FEMA, create a complex regulatory environment. Your job: navigate it with care and keep the company compliant. Master these frameworks to protect yourself and the company. Stay vigilant. Ignorance is not a defense. Corporate governance is the system by which companies are directed and controlled. It balances the interests of all stakeholders: shareholders, management, customers, and society. Good governance builds trust and sustainable value. 4 core principles define it: accountability, transparency, fairness, and responsibility. Accountability means the board answers to shareholders, management answers to the board. Transparency requires open, honest, and timely disclosure of information. Fairness ensures all stakeholders, especially minorities, are treated equitably. Responsibility means acting ethically and considering the company's impact on society and the environment. As an independent director, you must champion these principles in every decision. Uphold these pillars to earn trust and drive long-term success. The Board of Directors is the company's top decision-making body. It includes executive directors, like the CEO, who manage daily operations, and non-executive directors, who provide oversight. Among non-executives, independent directors are crucial. They bring objectivity and are free from conflicts of interest. Law mandates a minimum number of independent directors for listed and certain public companies. The chairperson leads the board, and separating this role from the CEO is encouraged to prevent concentration of power. Key committees: audit, nomination and remuneration, and stakeholders relationship handle specialized tasks. The Audit Committee, mostly independent directors, oversees financial reporting. The NRC recommends board appointments and pay. Committees allow deeper focus on complex issues. Your role: provide unbiased oversight and ensure robust governance. The right board structure is essential for balanced, effective decision-making. As an independent director, your legal duties are clear and demanding. Section 166 of the Companies Act requires you to act in good faith, prioritize the company's interests, and exercise due care and diligence. Independence isn't just a title. It's a legal requirement under Section 149. Schedule 4 details your functions. Bring independent judgment, scrutinize management, and protect all stakeholders, especially minorities. Directors are liable for fraud, Section 447, and false statements, Section 448. Penalties include jail and fines. Your best defense: prove you acted diligently and without knowledge of wrongdoing. The law offers safe harbor. Liability only if you consented, connived, or failed to act diligently. Always participate actively, ask tough questions, and record your dissent if needed. Keep personal records of your contributions. Diligence and integrity are your shields. The boardroom is where governance happens. The Companies Act mandates at least 4 board meetings a year, with no more than 120 days between them. Quorum rules ensure decisions are made with adequate representation. Your presence is often critical. Decisions are by majority vote, but consensus is encouraged. If you disagree, ensure your dissent is recorded in the minutes. Technology now allows virtual meetings, making attendance easier, but requiring digital discipline and confidentiality. Sensitive matters may still require physical meetings, but relaxations exist. Your active participation and vigilance in meetings are essential. Proper process protects both the company and you. Governance is only as strong as the board's engagement. Good governance demands continuous improvement. Annual board, committee, and director evaluations are mandatory under the Companies Act and CB-LODR. These reviews identify strengths, weaknesses, and areas for growth. The Nomination and Remuneration Committee usually leads the process. Criteria include structure, discussion quality, and oversight effectiveness. Independent directors must meet separately at least once a year to review board performance and information flow. Feedback from evaluations can lead to changes in board composition or processes. A statement confirming evaluation is included in the annual report, signaling commitment to improvement. As a director, expect regular performance reviews. Be ready to demonstrate your value and commitment. Transparency is the foundation of corporate trust. The board's report, attached to annual financials, must disclose CSR activities, related party transactions, risk management, and board evaluation results. Directors are collectively responsible for its accuracy. CB's LODR requires immediate disclosure of material events and quarterly financials for listed companies. These rules prevent insider trading and ensure a level playing field. Recent trends: mandatory ESG, BRSR reporting for top 1,000 listed companies, dematerialization of securities, and stricter penalties for non-compliance. Directors' and officers' liability insurance is increasingly important for personal protection. As a director, oversee ESG strategy and ensure accurate, timely disclosures. Transparency and compliance are non-negotiable. Stay updated. Regulations evolve rapidly. To succeed as an independent director, you must apply legal knowledge to real situations. Case study. If the board considers acquiring a supplier linked to the MD's brother, identify it as a related party transaction. Demand independent valuation, ensure the interested director recuses, and protect the company from unfair deals. Exams test your knowledge of board composition, committee roles, and disclosure timelines. Memorize key sections like 149 and 166. Another scenario: if management presents an unrealistic forecast, challenge assumptions, demand data, and record your dissent if concerns remain. This protects you from future liability. Quick recap: know the laws, uphold the 4 pillars, participate actively, ensure proper disclosures, and always act with integrity. Prepare for regular performance reviews and evolving regulations. Your role is critical to corporate India's health. Study the frameworks, ask the right questions, and be vigilant. Integrity and diligence are your best assets. Use this guide as your reference. The journey starts with knowledge and commitment. Be the director every board needs.